pretty much the lows of the day. Tech trade is really leading us to the downside here. NASDAQ's off by near 600 points now, 2.33%. But you do have some selling in other parts of the market. But as Mike Santoli was just talking a few moments ago, more stocks up than down at the New York Stock Exchange. That's notable. Josh, as we look at what this market is doing, I get that all eyes are on the tech trade, but as Mike said a few moments ago, this is what a rotation looks like. This is what a rotation feels like. It's not always pretty, and the S&P is being impacted more than anything else by the pullback in these tech names.
Yeah, so I think this is a larger problem for people who have these sort of one-dimensional portfolios where they think they're diversified because they own Dell, Ciena, Cisco, Corning, and Microsoft. And really what they've done is they've doubled, tripled, and quadrupled down on the AI CapEx theme. And then they say, well, wait a minute, one's a computer company, one's communications, one's a utility, blah, blah. No, it's a one-dimensional theme that you've been invested in. And by the way, it's the highest momentum area in the market. And that feels great when the tape is grinding higher a half a point every day. But that's not today. I think Friday was a really good wake-up call. I think a lot of people took a look and said, all right, I'm up huge, but maybe I should have something else going on in my portfolio. Guys, do me a favor. Bring up the Halo ETF, LOHA. Scott, it's green today. It doesn't own any of that. Here are the top contributors in Halo. Ralph Lauren, Home Depot, Clorox, Masco, Lowe's, Colgate. These are all up. Coca-Cola Consolidated, Bottling, Signet Jewelers. Every one of these stocks is up 3% today. Today, one day. Why? There's no fundamental, there's nothing specific about those companies. It's just recognition, what Santoli was saying just now, the torque of these rotations. Well, if you start out from a position of diversification and you don't have an entire portfolio betting on AI CapEx becoming more and more ludicrous into the future, today's not that bad of a day. But you are being sort of tricked by what the S&P and the NASDAQ are doing and thinking that's representative of a stock portfolio, and it's not necessarily for most investors.
Joe, this is what I don't know if you use the word violent or not, but I mean, this is what a rotation was going to look like. It wasn't going to be, this little, let's drain some of the gains that we've had in tech and we'll just put it in other areas of the market. I mean, tech's getting ripped up pretty good. Momentum's been downgraded at Barclays to neutral. That plays obviously right into your wheelhouse. And Jonathan Krinsky says today that tech is not out of the woods, uses history as a guide, and says when the NASDAQ loses 4% or more on a Friday, there's a 90% chance that Friday's low is breached in the next 5 trading days. And we don't think this time is any different. Maybe the market is starting to bear that out a little bit, that what happened on Friday needed to be retested, that yesterday's bounce was just that, a bounce and nothing more.
Yeah, I like the way that you describe all of that. Look, whether it's lower oil, higher yields, or just the parabolic nature of the way AI has been trading, it is very clear that the market is undergoing a rotation. And if you remember, in the early weeks of March, we identified that the market was rotating from value to growth. What I see now is concrete evidence in front of me that says the market's rotating. It's going S&P market cap to S&P equal weight. It's going growth to value. It's going momentum to quality. And to Josh's point, it's going intangible assets to tangible assets. Now, because of the very nature, Scott, of the S&P 500's weighting, you're not going to be able to avoid a lot of red on the tape. Let me give you a statistic for today. 20% of the S&P market cap today is 6 individual stocks. I'm going to give you Apple and NVIDIA included there, but we're not going to go Mag 7. We're going to go AMD. We're going to go Broadcom. We're going to go Intel. We're going to go Micron. Remember, Micron, Broadcom, these are trillion-dollar companies now. Every one of those 6 names is down greater than 3% today. That's 20% of the S&P 500. There's no way that the market can endure that type of a decline. But it is very clear that we are seeing the rotation. We're seeing laggards going to leaders. If I take the top 50 in the S&P 500 based on year-to-date performance, currently I have 82% of those 50 names that are lower. Now, if I look conversely at the bottom 50 based on year-to-date performance, guess what? 65% of those names are higher. So that's exactly what Josh has pointed out so far. And this is a very clear rotation that I don't think is a one-day event. I think this is what you're going to see through the summer.
Malcolm, you reap the rewards on the way up in a highly concentrated market. I think investors clearly, experience that. If they were mostly geared towards the AI trade, if they were at the higher market cap stocks, then obviously they reap the rewards of a one-dimensional market. Today, though, you feel the pain on the other side of that. As we said, the way that a lot of these stocks went up is potentially the way that a lot of them are going to come down. Now, Micron, there's a great chart to show you the huge ramp up. Who knows what the stock ends up retracing in terms of that run up, but obviously yesterday was a weak bounce because the stock's giving right back 7%, along with many of these other chip names like the AMDs, which Joe was talking about, which is down 7%. Intel is now down 7%. Many of the names in that orbit are following suit.
And I think it's safe to say that a lot of the bets that were being placed in the last few weeks have been somewhat speculative. Even if there is some there in names like Intel and Micron and others, I think that Josh and Joe made a point that I hope they're both right about, in the sense that folks are finally waking up and being willing to take some profits here and redeploy those dollars into other sectors and other cap weightings that might have been unloved up to this point. I'm not completely sure that it's that straightforward. I think we might actually be seeing people trying to line themselves up to get ready for the IPO. But I do think that maybe it's possible that folks are heeding what I've been saying for a few weeks now, that in some of these more speculative names, especially, and Micron, I'll pick on them since you brought them up, that has doubled their market cap within about 2 months, it's time to be realistic and say this whole thing can't go on forever. We've been unwilling to acknowledge that this does look a lot like the late 90s. We've been trying to bend over backwards and find ways to say, no, maybe we're more like 96, 97. I strongly disagree. We're talking about last year in 2025, just to give you an example, IPOs raised about $43 billion in combined capital. In 2026, we're talking about 3 names raising somewhere around $200 billion. Where does that capital come from if it doesn't sell out of a lot of these more speculative names, including Bitcoin? And I think that's probably got to be infused somewhere, even if there is a rotation going out of the AI trade and more to more quality names or more calm names that have been unloved through this year.
Maybe so, Jim, that some of what you're seeing is undoubtedly due to positioning around the SpaceX IPO, just prepping portfolios to be able to buy that name on Friday when it opens for trading. And maybe the retail cohort has been leading a lot of that, both on the way up and then on the way down. I feel like we need to address Apple because it's a significant mover. You own the stock. You were with us yesterday. It's moved sharply lower now. They unveil this, Siri AI, they got the app, and there was a lot of enthusiasm, I think, in the lead up yesterday. But it sounds like, or at least it looks like, the market is going to ask some serious questions about what this really means for their AI future, whether they proved anything yesterday or it all remains to be seen.
Well, it probably does remain to be seen, Scott. I think they have defined what their strategy is, which is to not do a lot of CapEx, to partner with Gemini, with Google, Alphabet, to use their technology. And that's a defined strategy. It has some advantages to it in terms of cost. But as you just said, I think we're going to have to wait and see whether the new models, the new Siri, is attractive enough in the holiday season coming up. I think the tension here has always been, and we addressed this yesterday, the valuation versus the fact that it's Apple and it has the iPhone and it has the services. And today and yesterday, that tension is breaking towards the idea that maybe it's a little overvalued as we're looking right now at 32 times forward earnings. And it's also maybe emblematic of the NASDAQ writ large. Not that there is something catastrophically wrong with Apple or the NASDAQ, but that all of these stocks needed a pause. They needed a consolidation, which is what I think this is. I don't think it's something worse. The profit growth at all of these companies, the economic growth in the United States, it's just too strong to say that there's something worse than a consolidation going on. In an effort to be helpful to our viewers, I want to say that I'd be looking more to buy in the coming days. I think it's probably a little too late to sell unless you're saying to yourself that you think you can perfectly time a 5% move to the downside that may yet come in the NASDAQ. To me, that's being way too cute. If you've trimmed your positions, as all of us have said, trim your positions on the way up, you should have some capital with which to buy this dip in the next coming days.